Hello, this is Steve Schwartz with Rios Quant, and this is Rios Quant Technology Made Simple. This is the GnosTICK and RQ Channel Basics. It's a Rios quantitative presentation. My name is Steve Schwartz. It is December 4th of 2013. The purpose of the Trade Lab, RQED workshops, IQ Room is strictly for educational and instructional purposes. It's not an advisory service of any kind and should not be construed as such. Past results are not necessarily indicative of future results, as we know. So with that said, things are changing in the world. I always start my webinar with this because the reality is that if you can't identify what these high-frequency trades are doing, as well as statisticians that are tracking patterns and trading behavior, that are creating this formula that predict future movements, you're behind the curve. So the traditional indicators that are taking place today or have been in the past, they're antiquated. Because the momentum is being created by these gifted math guys, as I'll put it in plain language, the formula is created by powerful computers and the programs are immensely powerful. But what they're doing is constantly monitoring market movements and trading patterns, and I'm going to tell you this is the operative: trading patterns. I'm a pattern expert. I studied classic patterns for 3 years, but there is no way that I could keep up with these high-frequency, momentum-driven formula. The one thing we have to recognize is the edge that they have, or not the edge, but they are creating the momentum with these powerful indicators. So it all starts with having to ask three separate critical questions. What, who, and how? Well, what is really going on is really related to the trading environment, how the benchmark instruments, as in the S&P 500, the ES, as we know it, and the Treasury notes are behaving with one another. So what's really going on is contingent on how the correlation between the ES and the notes, and you'll see that on my trading platform soon. Well, who is in control, we know, but where are they rotating the money is the question. And then the third question is, how can you profit? Well, we have two different trade signals, and then a strategy in auto trading that we want to use. But Rios is making, I should say, quant simple. We are quant traders. All members know that, and they should take pride in that, because in today's day and age, if you're not a quant, you're falling behind. You're looking in a rearview mirror. Quant trading is simple. It's a systematic implementation of trading strategies. We quants are basically disciplined to a methodology that's automated. I don't mean auto trading, but through a series of ranking and rating numerical systems, you're no longer having to spend an hour or two doing top-down analysis. I talked to an individual last week. He told me he spends about an hour, hour and a half in the evening preparing for the next morning. Well, that's too much time. There are tools that at a glance will enable you to mitigate the pitfalls that often plague discretionary traders, like spending too much time on trading decisions. Well, if you're spending too much time on trading decisions, emotion then starts creeping in, which is fear-based behavior creating indiscipline, and that indiscipline is created by greed and fear. Well, greed is good. There's healthy greed, but then there's unhealthy greed. There's healthy fear, and then there's unhealthy fear. So quant made simple is broken down into a quantitative ranking system looking at market sentiment on the macro technical, as well as a quantitative rating system on the micro technical, which we're going to get into. Well, the first thing that we have to recognize is that the market environment changes every day. And how that market environment affects the trading day is something that we have a tool called GnosTICK. And what GnosTICK does is it identifies market rotation, where money is moving out of an asset class and into another asset class. We are multiple asset class traders. Now that doesn't mean if you are attending and you are an E-mini trader only or you're a currency trader only, we're not going to push what you're about to see on you in terms of doing a number of different trades. When you come into our trading room, you'll see that we rotate, both Edward and myself, particularly EP, rotate in and out of different instruments. But that's because we're going where the momentum is. So we're uncovering steady momentum and identifying where the highest probability of price action exists. So when we're trading the markets, these three elements, trading environment, market selection, and trade signal, are equally as important. Each one of them are number one, and they connect to one another in one simple trading methodology. So here are the three steps. Remember, what's really going on? We identify that through the DMS, which is the dynamic market sentiment. Who's in control? We know who's in control. It's the hedge desks. It's the JP Morgans. It's the Morgan Stanleys or whatever. So who is in control is identified by the GnosTICK next stream, which is looking for aggressive momentum. And how can we profit? There's three different elements or opportunities to look at. There's the RQ channel, which is a momentum breakout system. There's GnosTICK, which is identifying early formation of trend analysis and trend change. Or there's Einstein auto trading, which is just what it says. It's a gray box, meaning you don't set it and forget it. You don't have to do that. But you can set it on any one of different settings that enables you total control, which you'll see. So step one is the market sentiment, the RQ crossbox. And what I'm going to do at this moment is take you to the site. This is the RQ crossbox. We'll get back to the slides in a moment. But the RQ crossbox basically identifies the quantitative ranking that I will define position sizing. I'm going to go to the account forum. I'm going to send each and every one of you the PDF. Check your chat box, because here is a freebie. This is the explanation of the RQ crossbox. Grab that, open it, save it for yourself. Then there's the GnosTICK user guide that will only do you well if you take the trial, because if you do this, you won't understand it without seeing the indicators for yourself. But the market sentiment each morning, step one, is what's going on? Well, we have what's called the RQ crossbox that's going to show you quantitative ranking built out of 9 different components. Major trend, major overbought, oversold. These are algos that are assigned a valuation in each one of these components of the top. This is the top of the top-down analysis broken into 9 different technical components. And each one of these components are assigned an algorithmic valuation from 0 to -2 or 0 to +2. When we add it up, -1 plus -1 is -2. Another -1 is -3. Well, all variations of the quant ranking from 0 to 3 or 0 to -3 is neutral. When you see yellow or neutral, it means that you're position sizing. That's what this tool is essentially doing for you in this component of the crossbox. It's telling you if you see yellow, but you see a good setup, to reduce your position sizing. This is for money management, and it's an excellent tool, which is a ranking system that tells you whether to step on it with higher leverage or higher position sizing, or lower, keeping it more conservative, for lack of a better word, or essentially just light position sizing. So you can see that the S&P 500, Dow Jones, NASDAQ, and Russell are all in a yellow quant ranking from 0 to -3 to 0 to -1. And now you have the 10-year notes, which is bearish. It's a -4. Any number that's lower than a -3 will show up as red. You'll learn that if you read the tutorial that I just sent you a link to. So, position sizing when yellow, that's financials. Let's just jump to the Forex. You can see most currencies are yellow. So any currency traders out there, if you see quant rankings that are developed or basically simulated, not simulated, but just giving a complete quant ranking or a total of +2, +1 is 3, take away 1 is +2, add another -1, that gives you a quant ranking of 1. Anything from -3 to 0 or 0 to +3, you bring your leverage down. So let's say you're accustomed to doing 100,000 on foreign currency pairs. Bring it down to 50,000. Let's say you're trading futures. You can't bring it down unless you do these mini futures, which aren't entirely liquid. So start learning what Forex pairs are. The negative feedback from years past is pretty much gone now. Regulations have essentially gotten rid of all of those, let's just call it negative connotations that we hear about Forex pairs. I can assure you they're well worthwhile. So you can see that the only instrument that we have that's really bearish is Aussie US dollar. So component 1 gives you position sizing based upon the quant ranking. Component 2, we give you a hot list at about 7 a.m. each morning. This one was released at 7:20. The upside is basically saying that the odds of price action to the upside is very high. Even though the quant rankings you can see in 3 of the 4 are neutral, that doesn't mean that you can't look at an upside trade or a long trade. You just have to bring your leverage down. We use this particularly with Einstein auto trading as well as the GnosTICK discretionary trades. The downside is showing you which instruments have very bearish, in this case bearish quant rankings, but the downside, they could be all yellow, but if they're on the downside list, you want to look to these as your higher priority selections. And we're going to use this, we're going to come back to this while I go back on the platform. So now, let's go back and just get this straight. Now that we know where to find the market sentiment in RQ Crossbox, and you're all welcome to go into riosquant.com and sign up for free for 2 weeks. And what we've done is we have identified the current environment, but market environment is broken into risk on, risk off, mixed asset classes, or conflict. Based upon these market environments, potential outcomes are going to be identified with intraday trends, choppy, or reversals. I'd prefer to use the word range bound than choppy, but I think we all can relate to choppy. But I like choppy. I don't trade choppy. I wait for the break out of the choppy pattern. So here's the sequence we're going to follow today on my platform. We're going to identify what the trading environment is, whether it's risk on, risk off, conflict, or mixed. We're then going to look for market selection through the RQ next stream, which is going to identify bullish leaders from bearish laggards, meaning the strongest of the strong bull instruments or the weakest of the weak. And we're going to use trade signals of GnosTICK and the RQ channel. This stands for RQ channel 7 setting. We're going to use trend signals with GnosTICK are going to be trend identification, early formation of trend, and or momentum trading. And we're going to touch a little bit on Einstein auto trading, and there has been some setups and trades. I'm going to take one break for a few minutes, meaning answer any questions that I'm noticing. I know Einstein was spelled wrong. Pardon me. Einstein here is okay. Thank you for bringing it up. I'll correct that later. Thanks so much for bringing that up, Tony. Much appreciated. Let's not focus on a simple hiccup. Let's move on. So we're going to go through the sequence. But before we do, here is our three-step sequence. Trading environment, market selection, and alpha signal or trade signal. My trading platform is designed with this metrics. Step 1, what's the trading environment? What's going on, in other words? Market selection. We have a tool called RQTech that's going to show you that and help you select identify where the momentum is, and then select different candidates, which is called the alpha signal or trade signal, whichever you prefer. All of this takes no more than 30 seconds to 1 minute to identify a setup once you have a workspace built. So the market environment is identified with the RQTech next stream. This is a 1, 3, and 8 hour setting broken into 30-minute pockets of time. 1 hours are broken into 2 30-minute segments. 3 hours is broken into 6 30-minute segments, and the 8 hour, of course, is 16, or a total of 24 30-minute segments that are dynamic, and time is rolling in and out of each one of the segments. It's not like it's on a stop clock. It's rolling through. It's dynamic. So what we're doing is looking for where the even or steady momentum is. So you can see that the notes and the bonds are bearish. The NASDAQ, YM, and ES are pretty much bullish with the exception of this 1 hour. That identifies risk on, where you've got bullish momentum on the equities, bearish momentum on the treasuries, risk on. Here's conflict. You've got all kinds of mixed momentum or price velocity in the currencies. You've got things changing here in the notes on the 8 hour. We have in our tool, it tells you immediately at a glance what that conflict looks like. Mixed is when the instruments, you can see that momentum is mixed here or price velocity is mixed here in the 1, 3, and 8 hour settings. Price action is sitting in the middle of the charts. You see where it says bull bear. You'll learn what that is in a minute, and that creates mixed. When we're mixed, we are moving to the independence first. You see how there is steady bullish price velocity in the grains and bearish all across the 1, 3, and 8 hour? This is called following the money trail. When we're mixed, we go to independents that have no correlation to interest rate sensitive benchmarks. So what the next stream is doing essentially is that it's identifying bullish and bearish and enables you market selection. Risk on would mean looking for risk currencies potentially to go up. Now what we're going to do is go into the trade signal, set this up, and then go to my platform. GnosTICK Trend Trade are looking for a numeric rating system of 5, 3, and 1. 5 is the highest price quality. We're looking for 5s on the above the upper green line, which is the demarcation of the bullish region of the chart. The RQ channel, or buy or sell stop, is an entry with what's called RQ channel overlaid the GnosTICK levels, where if price action breaks above that RQ channel, there is a very high probability of continuation. So GnosTICK Trend Trade, early formation of a new trend, looking for 5s, green 5s on the bullish side of the chart, red 5s on the bearish side of the chart. Now here's a red 5, but it didn't pan out. Why? You'll learn why very soon. Einstein Auto Trading is for the knowledge-based society. It's for de-stressing. It's about being able to, let's just call it, diversify, where you can't do a lot of trades at once, or nor do you want to manage them manually. So if you see a setup, and I'm going to show you a few, you want to put Einstein on so it takes some stress out of having to follow it and work it. And it is an indicator or a strategy that really is very, very high in its integrity. The RQ Trader is think-based approach for the new age of the financial markets using Einstein. You've got to be able to integrate in the way we think using some auto trading system as a diversification tool. And we believe the tools are for the new age, and they are quant-based technology. Once again, quant-based technology is taking a lot of different indicators, crunching it into some form of numeric rating or ranking system. Everybody on board? I'll take questions at this point. Question by Jimmy. If one activates Einstein and the trade is stopped out, will it auto reset for another trade or done manually? Good question. If you get stopped out and there may be a reversal, if Einstein is still active, going short. And I will get into that in your one-on-one coaching. We do one-on-one coaching, and you get, for just a little bit of a plug right now, if you haven't taken a trial, we do over 100 hours of educational content and coaching during the trial through a 30-day period. It's quite a unique program. We break our backs because we know this is new. This is genuinely different. So the GnosTICK accelerators, as we start looking at the 5, 3s, and 1, 5 is designated as the highest quality of price action. We're looking for 5s on a manual basis. The short-term overbought, oversold is a 3. It means that price action has gotten extreme. And the number 1 is exhaustion and or a potential reversal. This is what the 5 looks like. You see a 5, it has to qualify. I'll explain that with a 2-to-1 ratio or better. You'll see that. But you see the 5 price action closed above the bullish NOS level, which is the upper green line. You'll see that in the tutorial now. I'm going to go to my session. And then you can take that trade on the open of the next bar, and the stop will be put below the opposite green line, which is the bearish NOS level. Here is just the opposite, a red 5. This is what I refer to as an early indicator. I won't call it a leading indicator, even though it is. I'm going to call it an early indicator of a potential trend formation, either bullish or bearish. So what we're going to do now is we're going to go through the trading sequence. I'm going to take you on to my platform. Here is my workshop, workspace, and I'm going to go into a few different opportunities that have been created. We'll get into the YM, the crude oil. There may be another trade coming on crude oil. I may even close Einstein and do a discretionary trade. So what I'm going to do is go to strategies, take this out, here's the first trade with Einstein that was done right as I was closing the lab, and I told people one of things are going to happen. We're going to break down or we're going to move up. So I put Einstein on to take the thinking out. Now what I'm going to do first is give you a quick tutorial. This is the basics. This is the origin of all price action. First, you have these different levels, but there's only one pair of green levels. The upper green line is what's referred to as the bullish level, and it is the buy side only of the chart. You've got double yellow lines, which is resistance 1A, which is your first target. Resistance 1B denotes the beginning of a new zone. This will be zone 1 right here. And this will be zone 2. Really very simple. Now, if there's trades in zone 2, you would think that there's more risk involved, wouldn't you? Because its price action's higher. If we clear resistance 1B, we reduce our position sizing because it is higher and we're now in zone 2. And this becomes this red level, or final resistance, which will be the second target. Please recognize that these levels change at midnight Eastern time. They're dynamic. They are going back in time and then pointing forward for 24 hours. They don't change, and they are not pivot points for those of you that use pivots. They are not pivots. I highly recommend that if you do take a trial, you compare these levels to pivots. So the upper green line is the bullish level, which is the buy side only, and the lower green line is the bearish, denoting the bearish region of the chart, and it is sell side only. So we're not, because this is resistance 1A, it's a target. It's not resistance to go short against, even though, coincidentally, we stopped right here and came on down. We highly recommend that you look for upside trades and using these as targets to come out at, not go short in, because remember, all price action above the upper green line is buy side only. All price action below the lower green level, the bearish NOS level, is sell side only. Any questions about that? Richard asks a good question. What time frame and what moving average is the channel set at? No, there are no moving averages. Moving averages are lagging. The RQ channel, the NOS levels are not moving averages. What they're doing, they're high frequency, they're algos that are looking back a minimum of 2 days and then created at midnight and point forward for 24 hours. You don't see them change, do you? They're static. So they're not based on any moving average whatsoever. These levels were created 12 to 13 years ago by Joe Rios. Joe has been a money manager starting in the late 80s. He worked for Prudential Securities and actually established and ran what was called the Quantum Fund, which was a security managed account. He is a money manager. He is not a software developer. He developed these levels long ago, and perhaps you might wonder, there has been no optimization. There has been no need for optimization because it's not based on trend or moving average. It's based on price action only. So it looks back in history and then points forward for 24 hours. Does that answer your question, Richard? Okay, let me know if it does. And if you have a follow-up question, I'll get to it in a bit. So, there's your tutorial. We've got two sides of a chart, the buy side from the sell side, and now what we're going to do is work through the three-step sequence. The trading environment is defined by the ES, S&P, and notes. Why? Because the hedge funds, when they want more volatility, they're looking for more risk on. They'll end up buying equities. As you can see, there has been a brief breach into the bullish zone and then a reversal back down, and I'm going to just get rid of those clean this up. And the relationship that the ES has with the notes is going to identify whether it's risk on, risk off. Well, we're risk off here, and we're also selling off in treasuries. That creates conflict. There is synchronization, but both are selling off. When we're looking at conflict, we're looking at independence, Maria said that was a 10-pointer. Maria, if not more. I got 10.25 points. Wonderful. In which instrument, Maria? Oh, the other channel. You're talking, Richard, you're talking about the RQ channel. Okay, the blue, these. These are like the GnosTICK levels on steroids. They go back a minimum. If the setting is a 2 setting, or a 7 setting, it looks back a minimum of 7 periods and then points forward. See how this has come down? This is not a moving average. If it was a moving average, you'd be seeing the moving average just sitting right in between these levels. Now, I put on the natural gas because I believe that the natural gas may be in store for a reversal out of the bullish zone into the bearish zone. Take a look at natural gas. You've got the 1 hour and 3 hour bearish in price velocity, and you've got the 8 hours still bullish. Well, we'll see if that comes to fruition. Now let's take a look at what happened this morning. We're going to do this in the sequence of time. Early on, we got an early formation. This was at about 7:30. Let's take a look at the time. 7:20. See this 5 right here? Just kind of widen it out. See this 5? That's telling you the highest price quality is bearish. It's a red 5, which means it closed on the bearish side of the chart. Remember, the lower green line is the sell side only. There's a 5. That's the high quality price action. Now, does it qualify with a minimum of 2-to-1 ratio, meaning 2 points to be gained versus 1 point to risk? In the data box, we have this panel that will, if you hover over the 5, it'll tell you what the risk-reward ratio is. Keep an eye on these rows. Well, the minimum criteria we use is 2-to-1. Well, I noticed this early in the morning. I then saw the RQ channel. As this was going sideways, this dropped here. See this? This is an early or leading indicator. We're going sideways, but look what happens to the RQ channel. Breaks down when price action actually was up. And then it goes sideways in here. And when I saw this 5 and I saw that RQ channel, I put in a resting order as a sell stop right here. I got filled. I put it in here when this dropped. I put in the price order resting to stop into the trade, and I got filled. I put in my target right above. Remember, support 1A is a target. I'm not going to play the game that it's going to hit the target. I give myself a cushion, and I gave myself a cushion of about 15 points, 12 points above the level, and I took it. That's 200. Now that was the first trade early in the morning. As I was closing the trade lab, I mentioned crude oil, but I decided that I didn't know which way crude oil was going because we were going sideways through the whole session, and in fact went sideways after the oil report was announced. Came down, showed the 5. I didn't trust that 5 because at that point momentum was still bearish. So what I decided to do, and I told this to the group, if you were in the trading room, that it was best off to use Einstein. Einstein was put on right here. And I started it, well, let's put it this way. I have a different workspace. This was an auto trade. This white line denotes the previous day's high. Here's the RQ channel. At this point in time, it's set, and I'll go back to, well, let's just go to my others. I'll go to my Einstein workspace. Here's crude oil. Okay. Here's Einstein. I could have easily have taken a manual trade, what we call a discretionary trade versus an auto trade. I set it at 10 o'clock. Let me get this straight. Let's just get this. This is very easy. The settings are easy. Actually, I set it at 11. Pardon me. Okay. And here's the last opportunity to do a trade is at 1 o'clock or 1300 hours. Just give me one moment, please. This is totally flexible. Well, I'm not sure why I'm having a problem, but I'm not going to waste our time working on this, but I'm going to do it one more time. I'm going to close this down, disable it. And then I'm going to change this to 200. I'm not, if I recall, that may have been the setting. All right, well, let me go back to the other session, the other workspace. Excuse me, I'm having some issues. Here's the crude oil trade. This was Einstein right here. This was put on, and the setting was started at about 10 a.m. or 11 a.m. where we were in a trading. We had the long entry finally breaking above, hit the profit target of 200, and now we're going sideways again, and we're done. The setting was to finish at 1 o'clock, no new trades after 1 o'clock, and now we know it's 10 to 2. All right. YM started the day with a breakdown with the GnosTICK 5 and the break of the RQ channel. I wasn't sure what was going on with crude oil because of the sideways action in here. The momentum was bearish at that point in time. So I decided to put Einstein on and take the stress out of thinking about it and let it either break to the downside. Einstein respects the bullish GnosTICK levels. It'll only buy on the buy side of the chart or sell on the sell side of the chart. Here's the next go. Take a look at natural gas. Natural gas, you've got the 1 hour next stream, which is bullish price velocity. The 3 hour is barely changed, but look at the 8 hour. Now we've got natural gas trying to breach this RQ channel. What I'm going to do is I'm going to do a buy stop on natural gas. It's an independent. Independence should be looked upon when we're in conflict, when trading environment is conflict. I'm going to do a buy stop entry. It's a little late, but we still have a little time. And I'm going to see if I can't take this. What I'll do is I'll go for, this is the previous day's high. What I'm going to do is put in a sell limit right below the previous day's high. I'm looking for about $120 profit. The risk is going to be, if I get filled, the risk is going to be right underneath the bullish NOS level, right in here. So we'll see if that gets filled. Now let's take a look at, we know that the ES has hit critical support. Now let's take a look. Here's the YM. Crude oil is still active. No, that's closed down. So we took that. Now let's start looking at NASDAQ, because I talked about, got to move that over to December. NASDAQ, all of these instruments have hit final support or critical support. That means the game is over. Unfortunately, we can't do a trade once we hit the critical support. We are by no means trying to buy off of critical support. That's not momentum trading. You're going with the odds. The YM was the biggest opportunity early in the morning. Take a look at what's happening with the YM now. It's been two-sided and it's hit critical. So the stock indices, unfortunately, are done for the day. But we have natural gas that's still a potential setup. And natural gas, remember, natural gas is on the upside list. So I'm going to attempt to do a buy stop right here above the bullish GnosTICK level. Well, what qualifies that? First, the RQ channel has to rest at below the midpoint of the zone. Bullish zone 1 is here. This white line is the previous day's high. Bullish zone 2 is right here. Well, we shall see what we shall see. But this is going to be a manual trade. The RQ channel is a 7 setting. That means that the RQ channel is counting a minimum of 7 points back, 7 bars or candles back, minimum, and then points forward. See how price action is going sideways and we took this decline? That's what made this appealing to me. Now, something may happen, other may not, but it is a good candidate, because anytime you see a trading environment in conflict between the ES and the notes, we're looking at independence. We could look at soybeans. That's another one. Now that we know that the stock indices, unfortunately, are not playing ball with us because it's hit final resistance, final support, let's take a look at soybeans. Unfortunately, there's not much time left. So in any event, here is a break into bullish zone 2. Remember, all price action above, resistance 1B to the final resistance is called zone 2. there may be a real quick pop. Momentum is good. Here is a high established earlier. If we could get a green 5 with the right risk-reward ratio, and we've got 3 minutes and a half, that may be a short-term trade. But problem is, once the Board of Trade closes, Globex closes until tonight. And that's where I don't think I'm going to run the risk of taking the trade even though there is a 5. All right, I'm going to take, at this point, I'm going to take some questions. We've got plenty of time. We have until 2:30. Now, what we can do for the more advanced traders is we can look at 2-minute charts. For instance, if you wanted to use the natural gas and you did not want to do an RQ channel, and that 5 right here qualifies, I'm going to open it up. Let's hover over this 5. It's got to be 2 to 1 or better, which it doesn't. Take a look at this. I'll drag this down. Take a look at this 5 I'm hovering over. It's 1.7 to 1. Not good. Doesn't qualify. So I'm going to be a momentum trader on natural gas. If it breaks it, I want in. Okay, so Tom is asking a good question. If I get filled, it would stand to reason that if this is the bullish NOS level, which is broken above, this would become support. Tom, doesn't that make sense to you? Does that make sense? Good. So therefore, I'll put my stop, just to be safe, underneath that low. Now, I'm not going to put the stop, I'm not going to let that rest because I don't want to get that filled in the event I don't get the momentum trade, the RQ channel trade. But I would put the stop right underneath this. Now you might say, well, I'm taking more risk for reward. Well, sometimes you do, but we're playing the odds.
Order canceled.
Now look at what's happening. We're on the bullish side of the chart, but momentum is turning bearish. That's telling me with price velocity turning bearish, I'm not really a happy camper in staying long. So I'm going to cancel that. Now that I'm looking at the RQTech and the 1 and the 3 hour are starting to turn negative, I really am not interested in that. This could be a fake out. It could poke back above. The overall momentum in the 1 and the 3 hour is negative. Yes, the 8 hour is strong, but I don't think that the odds now are turning in favor of an upside move. And even if I don't want to get stopped in, poked up, and then down. I want to see all green, all bullish price velocity in the RQTech. If I don't have it, I don't want it. If I can see it turn green again, then I'll put the buy stop back in. Jimmy asked a question, can it ever blow past the stop and not get stopped out? No, you're going to get stopped out, but in a fast market, you may not get the price that you had. So that's the answer to the question. If it's in a fast market, you will get filled, but you are going to get what is the next fill. Good question, though. Now, take a look at what's going on. We're in conflict, and look at currencies. It is a mixed hodgepodge of uneven price velocity. I would not turn to currencies at this time of the day with anybody's money, including my own. Natural gas is starting to push to the downside. There is probably more probability of price action working lower because of momentum. But we'll see. This is a time where you might want to put Einstein on. I'm not going to, but that's because I want to see if we can't find a manual trade. ES, or the ZS, that's out of the game now. It's done. We're going to close in 10 minutes, so that we are not going to even consider. Unfortunately, price action has really moved. Take a look at the accuracy of this support level right here. Take a look at these levels were established at midnight. Price action dropped to the sell side, stopped at support 1A, 1B, only to reverse to go to resistance 1A and stop on a dime, only to come down with momentum, heavy, serious selling momentum. And look where it stops, right on the final resistance, support. Now, if we do a hypothetical, let's see what Einstein would have done with this. Let me do that. Now, this is not a trade that I put on, but we'll do a hypothetical. So what I'm going to do is close the chart trader. I'm going to go to strategies. I'm going to hit Einstein. Let's just say we see this crossover here. Price action is coming over here. Let's do this for a moment. Let's start at 11. Let's just do an 11 o'clock. Well, let's just do noon. Let's do a noon setting. This is hypothetical. So I'm going to do 12:00. And I don't want to trade beyond 2 o'clock. That's 1,400 hours. Our basics is 300 on a more volatile instrument like the S&P. I'm going to activate and see if there's a trade. There may not be. We'll see. Noon, 2 o'clock, no trades beyond 2 o'clock. Profit target 200, risk 300. And we can play around with this just to show you that this is flexible. Oh, got to change that. Oh, hold on, be patient. I've been doing a lot of things, and you have to be patient with me, please. There's true, got to do that. Go to false. Okay, let me just do this for a moment. All right. I'm going to change the calculate on the bar to close, not on a close. I'm going to then activate enabled. I'm having issues with this ES. Here's the Einstein. You'll have to excuse me, folks. Let's change this to 1,300 hours. All we're trying to do is a hypothetical here. And sometimes there just won't be a trade. Okay. And if it doesn't show up, Maybe that could be it. Here we go. Price action moved to the sell side of the chart. But the algorithm kicked in short here. You can see that it completely ignored support A and support 1B. But it kicked in here, blew right through it. The algos, this is the nice thing about Einstein. The only levels that Einstein respects is the sell side only of the chart from the buy side. And you can see there was no long trades anywhere in here. Why? Because I had it set, take a look at the time, from 12 to 2. Now this was not put on live. The YM was. So that's in real time, but this is a hypothetical. And what it demonstrates is Einstein will not respect the supports 1A and 1B because the algos are saying high probability of continuation through supports 1A and 1B. So that's the algos will not take into consideration support 1A and 1B. So that took the trade, Einstein, if I had had it activated in my SIM account, because this is all SIM. I'll take some questions now. Please feel free to ask. Now you can do Einstein on 2-minute charts. It depends upon what type of risk you want to take. It's completely flexible. We teach using 5 minutes, but the more advanced trader that maybe wants to scalp, take less risk, take less profit, they can change it to a 2-minute chart. Maria asked a question, and I'm not sure. Do you only run Einstein for RTH? I'm not sure I understand RTH. Can you help me? Now, I would not, you see, this is the nice part about Einstein. I would not have taken this trade manually. There's no way. This got short right above support 1A. But Einstein's algo said high probability of blowing through it because it doesn't respect it. And when I say respect it, meaning it doesn't, these levels do not get calculated into the Einstein algos. These do because, once again, Einstein respects the sell side only of the chart from the buy side only of the chart. Now let's just go back and reset it at 9 a.m. and see what happens. I'm going to take the strategy. I'm going to disable it for a moment. Then I can change the setting, and I'm going to put it on for, let me just make sure. We'll do 9 a.m. The nice thing about it is it's totally flexible. See what happens with 9 a.m. Here you go. 9 a.m. Goes short. Gets stopped out. That's because this had a major reversal. You got to pick your spots. And quite frankly, this is why you don't run Einstein always. I can tell you this. Einstein, it's very likely that momentum at this point was bearish, but here's a perfect example of where Einstein stopped here and gets stopped out, but then reverses back onto the sell side and goes short. Now let's say for a moment you're stopped out here with a $300 loss, but now you're seeing the market move through the bearish zone and you want to use Einstein and reverse it with more profit setting. So what you can do is you go to strategies, disable it once again, and you could go for a profit of $400. Not sure it will work. So now you're reversing and going after making back a good part of your money. Actually, it would, if it did pan out, and you'd have a risk, let's say, of 200. I'm just playing around right now. I'm showing you the flexibility of this. I'm not boasting anything. We'll see. We're all going to see this for the first time. Trust me on that one. And see what happens. The beautiful part about this is not a black box. This ended up being a stop and then back to a $400 gain right here. This was a 204 points. This was a $200 risk. No, it's six. That's a $300 risk. And caught 8 points gained. You can do it if you want to be aggressive. Now, why would you want to be aggressive? Yeah, because maybe momentum is bearish, as you're seeing this reverse into the bearish zone. So it's completely flexible. That's the point of this example. We'll close this down. Don't need that on any longer. Let me close this. Now we're back to discretionary trading. Any questions? Maria says, that was my entry. You can, Maria, but you see, then you're running the risk. Maria asked the question, do you set it from 9:30 to 4 Eastern? You can do that. But you see, what happens is if you set Einstein to 4 p.m. or 1600 hours, then going into the close, it's possible that you could get, Einstein could get filled, and then you're dealing with the overnights. You don't want to set it to 4 Eastern time. $86.25 was your entry. Nice. I think this maybe you're a duck who's found a pond that just might be able to give you a little bit more edge. Let me ask you, we've got 15 minutes. Let me ask you, she's laughing. Hey, Maria. One thing we for sure don't want to do is take ourselves too seriously, right? So let me ask those of you with any questions. Please join me. Get involved. Ask questions. Don't be afraid. Yeah, I live on a lake myself, Maria. Now we have time, and I'm looking at this natural gas. It's getting late in the day for natural gas, so I wish I'm really thinking it's going to break down. Here's natural gas right here, and unfortunately we went static. Soybeans, it's over with. YM, we hit. Unfortunately, we are running out of candidates. Let's take a look at copper. Copper, believe me when I tell you, I know that day traders, and copper did kick in. I guess that's an Einstein trade. And Einstein, once again, will not. Yeah, that may be what happened there. Just a second. Let's go into, yeah, that is an Einstein trade. Yeah, it's a long entry, Einstein trade. I'm probably going to close that soon. Let me go into my other workspace, the Einstein workspace, and see what's up. Well, we know that YM is over with. The CL is gone static. We know what happened there. Let's change CL to HG. There's Einstein. And look at this chop. Went long, got stopped out. Went long, caught some money. So this was a $100 loss right here. Oh, actually, it's a break even. We had a 200 risk versus a $200 profit. So lost 200, gained 200, break even. Now, remember, Einstein, if you leave it on, and we had that set at 11 a.m. to 1, it can take trades. Remember, the only levels that Einstein, let me open this up like this. The only levels Einstein respects are the double green lines, the buy side from the sell side. If you want to run it and you see trending environment and you want to stay with it, you can throughout that critical support, a resistance. Now, if I change this to a $300, and you'll see what I'm talking about, if I change it to what we would basically standard teach for the moment, I'm going to default this, disable it for just a moment, and then I'm going to change this to a $300 risk, whoops, the upside down, as I call it. Don't let that scare you, because certain instruments need room to breathe. Let's see what happens. So the 200 by 200 profit versus risk broke even. Let's see what happens with the standard $300 risk. I'm curious. Aha! No stop out. The $200 risk was too tight. But take a look. Now, I didn't do this trade. Maybe I did do this trade. This was actually set. So this may show up. I'm going to look. Just a moment. No, I didn't do that trade. It was set at 200, 200. But let me see for a moment. Let me go to orders. There it is. All right, so you can see that giving Einstein some room to breathe in terms of price action was far more effective. Instead of break even, it would have shown a profit. So I guess the point in the nice part about Einstein is it's really flexible. This is I was just kind of getting it set up. That's this week, Monday through today. This is where I stand in my SIM account. And take a look at this for a moment. I'm barely scratching 60%. Yet, so far so good. And we all know that 50% or better you can make money if the money management's right. And certainly it was right. So far there's a net profit in the SIM account, I want to be transparent about this, of $1,000. That's since Monday. Albeit, we were under 60%. Winning trades 11, losing trades 8. Percentage profit 57. So you don't have to be a guru. You don't have to be 75, 85% because it's unrealistic. But if you're using these indicators right, and we'll teach you for those individuals that are serious about maybe needing a change, or you're advanced and you want to add something to your arsenal, we'll be more than happy to do that for you. Jimmy, this would be pretty much, he asks on what size account. My account I treat as a $25,000 account, but the actual SIM account enables $100,000. But I do everything based on $25,000, meaning my position sizing. I'm not sure I understand what you mean by disagree, Maria, but I'd like adding to the arsenal. Okay. I'm not sure I understand that, but that's okay. Whatever that means. I'm not sure, but I'm sure you'll elaborate when we talk next. The one thing I want to hear is disagreement. Not to rebut, but for me to learn something. Because if I'm hearing, oh, okay. Well, remember, I'm showing a hypothetical. That's all I was doing. Maria says, well, Maria, then we have something to learn from you. This, we have to decide whether you will have to decide whether this is going to be for you. You're in trial. I'll be more than happy. There's certain elements that you may want to use. Maybe Einstein's not for you, but we certainly want to help you with any aspects that might work for you. Because at the end of the day, and I'll explain, because we're going to wind it up. If you take a trial, you have 2 weeks. You can gain a huge amount of knowledge from us because there's 100 hours plus during the trial of educational content, of the trade lab, of workshops. But you got to test it for yourself and experience it during the live market in real time and evaluate for yourself. Discover if the system trading is right for you, whether it be GnosTICK, levels, and once again, our memberships have numerous levels, and I can assure you this, the price is right, especially during the holiday incentive. So during the trial, it's very simple. The installation, okay, tech support, Amber Little is going to get in touch with you. If you'd like, all you have to do is take the link that I'm going to send to you next. You get training one-on-one, live, active. There's 2 workshops covering RQ-Tech, the market selection, as well as the RQ channel. And you get the tradingroom.com. So the tradingroom.com trade lab, here is the link. I'm going to put it in the chat box for those of you that have yet to do it. This is for tomorrow and the rest of the week, I should say. Here it comes in your chat box. Tell me if you can see that. Maria, whatever you love, we love, because we love it all. But if there's certain aspects, please let us help anyway. Because we're not going to try to sell you everything. This is a complete customized membership. We're only going to address your needs. If you are struggling and you need a paradigm change, we want to help you. And this is what we give you during trial. So when at the back end of the trial period, you're going to feel as though first of all, you've learned something new. You're going to get personal one-on-one coaching and mentoring during the trial. And there is a wonderful holiday discount taking place. So here's the link, and I'm going to put that in the chat box once again. Let me hear from those of you that are looking for some form of addition, if you're more advanced, and see, let's talk about it. Or if you need a paradigm change, you're struggling, you want to basically make a change, be a quant trader. Good-looking fellow. Mike, that's not me. I'm better looking than those two. In fact, I have more hair than both of them put together. This is Jose. These are real shots. These are not canned pictures. This is Jose Flores, who's admin, also a trader, and this is Carlos, who is trading with us in our trading room. This is our trading room. And we have events that people come in from all over the world. People from Australia, from Colombia, all over the North America come into the Rios Quant. We have quite a trading event that's either 4 days or 5 days. There's 2 different types of events. February, we are conducting the auto trading week. 4 days, really honing in, live trades with the intent of you coming into the Gables, for those of you, and I think it's almost sold out, but coming into the Gables and walking away, hopefully paying for the event, because you're trading with Joe himself. They both are ancestry in Cuba. That's correct, Jimmy. Any other questions before we wrap it up? Guys, if you need any questions, my email address right here is steve@riosquant.com. Once again, you have the link for the demo. Maria says, if you come, will he make you a Cuban sandwich? I don't think he's going to make you a Cuban sandwich, but right downstairs, 2 stores down, there is a fabulous, fabulous restaurant. And we throw a party for the attendees, and they make a great Cuban sandwich. Mike asked the question, why don't you create an online auto trading package and offer that if we can't make the weekend down in, we are. You know, that's funny, Michael. We're asking, Joe Rios and I have, Joe already has tabled it last night in a meeting I had with him where we're going to do a package with Einstein as a separate package. And that is going to be included in the holiday incentive. We just haven't worked out the details. So if you're interested in the holiday incentive, Michael, please let me know, and you've got, we can talk about it. Okay? No, Maria says, I thought the Gables was more Miami-ish. Quite frankly, Coral Gables was founded by the Spaniards. Coral Gables, all of its architecture is Mediterranean. It's this Mediterranean enclave. Basically, it also houses University of Miami. It's really grown into a mini city that is surrounded by the Caribbean influence. But Coral Gables is clearly a Mediterranean versus Caribbean. All of the architecture. Coral Gables is one of the first outposts when the Keys were founded, and one of the first what would I call it? Train stops. Well, the weather is spectacular in February. It's already turning fantastic, and the weather is considered going to be dry. The Grove is 20 minutes from Coral Gables. It's 35 minutes from South Beach. It's 30 minutes from Key Biscayne. It is truly one of the greatest locations. But I think we're, you know, the actual event for February is, I think, within 1 or 2 seats of being sold out. There's what's called that's Trading with Joe, and the focus is going to be auto trading. The next event is the last week of April, the last Monday it starts of April. It's called the Professional Traders Retreat, and that is about 60% comprehensive, 40% live trading, and it is really strong for the individual that's just getting started. The auto trading coming up is probably for more the individual with an advanced skill set. I don't know Trader Joe's, Jeff. You're in South Florida, aren't you? Yeah. I'm not sure what Trader Joe's is. I don't know where it is, honestly. We are right in downtown Coral Gables, right off of Lejeune, and oh, here is oh, I don't have the, what do you call it? That's a shame. Oh, here. Let me show it to you this way. We have great holiday session. If you buy it right off the website, I don't recommend it. Not this month anyway, because it's a $250 trading room. It's being offered at a completely different price point during the holidays. If you want to request an appointment to speak, just go into About Us. You want to contact us, this is our address. We're off of Lejeune and Alhambra Circle, which is the banking district. This is a former room we have. This is a couple blocks off. We made a relocation. But any inquiries, just feel free. Just info at support, probably best support, or just send me an email. Yeah, I've archived the session. It is going